Hey, it's Charisse Conan Johnson, and you're watching Charisse TV. Welcome. It's been a week. I know the stock market is crazy. The S&P was down roughly 11.5%. The Dow was down just under 12%. And so, with those kinds of levels of declines, folks are out here shook. All right. The S&P hasn't been that down since 2008. And we all know what happened then. I don't think we'll have a repeat of 2008 overall, but I do think that investor concerns are legit. Coronavirus is the main impetus. And I do think also investors were waiting on the sidelines for a while, wanting a piece of news, something that would actually spark a sell off. Valuations were getting a bit rich in terms of stocks, and you could almost feel that a correction was almost necessary. It's interesting because the markets lost $3.6 trillion worth of value, and I mean that by stock market value and valuation. And so that's a lot of money to lose in 1 week. Companies from airlines being affected to other companies like car manufacturers to even sporting good companies that make and then also sell a lot of goods in China. I think everyone is trying to figure out the overall effect of the coronavirus on companies, on their earnings, and then ultimately on their stock prices. So this is something that you're going to need to pay attention to. Yes, one can argue that things have been overdone, but on the other side, again, I think the market was a bit waiting for some impetus for selling. I read in a journal that roughly $18 billion have moved out of mutual fund and ETFs, which tells me that people are wanting to lock in some profits that they've had over probably the last year and wanting to have some safe haven. Many a times when you have a stock market sell-off, people run into bonds and more safe securities. And so you saw an increase in bond prices. And when that happens, yields come down. And when that happens, we have also the after effects like bank stocks, which actually don't benefit when yields come down because they make less in terms of the money that they're lending out. And so bank stocks take a hit, but also most, if not all, sectors, if I'm not mistaken, took a dive last week. And so, what I want you to keep in mind, though, is that this will pass. I know, again, it can be hard to settle in and settle down, but I want you to think about, is there a buying opportunity for you? Are there things that you've been wanting to buy that you're saying and have said, man, it's too rich for my blood, this price is too high, or in terms of price to earnings or other valuation metrics, I wasn't ready to buy a particular company or even a mutual fund or ETF? Well, now is your time. I know last week for myself, I had one company that I had my eye on for about a month now, and I ended up hitting that buy button and buying a little bit of the stock. I didn't spend everything that I wanted to spend because I want to ease my way in, dollar cost average down, wait for other dips to buy that particular company. But I dipped my toe, which now has me invested, right? Once I actually put money down. And so that's important to keep in mind. I also, shout out to some of the companies that have been positive. Think of a company that you probably are using, if not every day, then every other day. Zoom Communications. I use Zoom every single day these days. And it's because I'm communicating with my colleagues who do not sit in the same office as we do and clients. And so with people being shook by the coronavirus, and trust me, it's real. I was in DC last week. I was wearing a mask, people in the airport. It's a bit crazy, but I digress. Zoom's shares have actually gone up over the last week because more people are resorting to video conference than flying over to China or other countries that might be affected, like Korea. So I want you to know, again, there are some bright spots. Another bright spot is E-Trade. E-Trade, you might, if you didn't see it, E-Trade is being bought by Morgan Stanley. Morgan Stanley is more of a traditional brokerage firm, but now they're buying E-Trade. And it's pretty big for the industry because last fall, to be very specific, Charles Schwab, a competitor of Morgan Stanley, announced its planned merger with TD Ameritrade. Both Schwab also announced zero commissions, and I'm a beneficiary of that because I'm a Schwab customer. E-Trade was already there. And so it should be interesting. We wonder, and I'm thinking a lot about who's going to benefit in the long run, which company, but ultimately for you as a consumer, hope you're benefiting from an easy merger, transition, and all the things that come with two companies coming together. And with that, I want you to keep an eye on another merger that has made headlines. It's Intuit that announced to purchase Credit Karma. Credit Karma, you might recall, Credit Karma allows you to monitor your credit and credit packages and credit score. And they've announced this merger as sort of transformational for the personal finance industry. So more to come there. But in the meanwhile, send me your questions, send me your thoughts on the recent market activity, which is, again, volatile. I want to know, I want to be able to be there for you and empower you to stay the course. And lastly, I'll say this is a time where you want to be in communication with your financial advisor. So if that hasn't happened, then it's time to do that. All right. Well, off I go. Have a great week, and let's keep journeying together.